Well, good afternoon, everybody. Welcome back to another episode of the Industrial Real Estate Show. I am pleased to be joined by Kraig Heater, a fellow SIOR and industrial real estate enthusiast. And we're going to talk about all things to do with industrial real estate, but specifically the Seattle market and the surrounding areas, advanced manufacturing, probably get into some nearshoring. And we're just going to have a fun nerd out conversation about industrial. So, Kraig, thanks so much for joining me on the show.
Yeah, thank you, Chad. Looking forward to it.
Yeah. So can you jump into a little bit of your background? I know we were just talking, you got your SIR designation in 2016, a year before me, but I'd love to hear just a little bit more about your background on how you became executive vice president of Kidder and how you got to Bellevue, how you got into industrial real estate in the first place.
Sure. Well, that's a really long story, but I'll make it brief. So I went to a little school called Hillsdale College in Southern Michigan, played golf there, and had the dream of being a professional touring player. I did that for a year all around North America. And I realized when I was in Orlando, my final round for the Canadian Tour qualifying school, that I was not good enough, right, to do this for a living. And I got married in college. So my poor wife was living with my parents, and I'm traveling North America playing golf tournaments. And so on my way back, I said, oh my gosh, I always want to be a professional golfer. I had no idea what I wanted to do for work. So, the 5 days took me to drive home from Orlando. I started leveraging my network and making calls and trying to figure out what I was going to do for a living. And, my dad had a business. And so I leaned heavily on his real estate broker for advice. And he got me an opportunity to meet with Jim Bowles, who's still in the industry. And Jim was a managing broker at CB Rich Dallas and Bellevue. Now he's at Lee and Associates now, and I called him every day for, I think, 4 months, every business day for 4 months until he gave me a job. And that's the honest truth there. So, worked for CB Rich Dallas for 6 years, learned a lot of things, what not to do, and bumped along the bottom. Came to Kidder Matthews as our CB office closed in my little submarket, and they moved to downtown Seattle. I did not want to work downtown Seattle, so I came over to Kidder Matthews, and that was 18 years ago. So I've been in the business 25 years, and my business has just grown just organically, deal by deal, referral by referral, slowly over time, and it's been a great ride. And the market is kind of still on its ear in Seattle area. It's not very good, but it'll come back. This is not my first rodeo and my first recession or real estate recession, whatever you want to call it. So eager to talk about it today. And I started a podcast a couple years ago, which you were on last week, and that show should drop probably today. And part of that discussion was, my podcast is about stories behind the deals, which we talked about. And there's lots of stories in real estate. So maybe we'll blend in a story or two about the Seattle market in here, because I like to talk about stories behind the deals. So yeah, let's get into it.
Yeah, I think that's a great explanation on how you got into it. And for anyone listening, I think the key thing that you mentioned at the beginning, for anybody considering getting into the industry, is you called the managing broker 4 months every business day before he gave you an interview. That type of tenacity gets rewarded in our industry, because if someone's willing to do that at the beginning to just get the job, they're probably willing to do that and then some to try and find clients or to try and get deals done. So I think that that's a great lesson, is if you call someone and they don't get back to you right away, be prepared to call them for the next 4 months until you either get a job or a restraining order. So I think that's a very good lesson there.
Well, it's a lot about persistence, right? Persistence is important. I think, though, I probably annoyed him, and so he's like, Kraig, I'm going to get you a job just so you stop bugging me. So whatever works.
Well, I heard a lot of junior agents now myself, and I would be very impressed if somebody had that type of gumption to be calling that often, because I just have to think that they would do the same thing trying to call tenants or landlords. So I think that's an admirable skill and talent, and I'm sure that's contributed to your success as well. But let's jump into some stories. So I was in Seattle last year and I was in Bellevue. So I probably wasn't far away from where you are right now. And one of the things we did a little bit of a family trip. And one of the things that we did was went up to Everett and did a tour of the Boeing factory,
Hmm.
the 4 million square foot behemoth of a building. Uh, Public tours are open again. They were closed for a while. It was absolutely incredible. I walked through industrial buildings for a living, but seeing something of that scale still blew me away. So let's talk there. What's with Seattle's industry having a robust amount of these large, especially aerospace companies and aviation companies there, is that is that the driver of your economy right now, or has it shifted more to technology, or is it a mixed use, a mixed different types of industries, or what is the catalyst that's pushing either Seattle's economy forward or perhaps holding it back?
Sure. Well, that's a loaded question. And, actually a political question too, because you've probably seen the reports of Seattle proper of all the issues. And, the new mayor is not helping business. And this isn't going to be a bashing session, but, she protested with her group her first day in office outside of Starbucks headquarters. And I know somebody who works in the C-suite there, and it was not a good first impression. So that's why one of the reasons you're saying them create Starbucks, a big presence in Nashville, where their second HQ is. Part of that was a talent thing because they wanted to spread their talent and attract more talent. But the climate in Seattle proper is tough right now, like a lot of West Coast cities, or West Coast states even. Boeing's been a rock. Not only Boeing, but all the subs that come out of that. So there's definitely a trickle down effect. Boeing probably, I'm not going to say save the industrial market in probably 21 or 22, but they did almost, 2 million square feet of leasing
Hmm.
where they brought a lot of parts over from Asia that they needed, just in time inventory. I think they knew tariffs were coming and they gambled and won on that. So, for instance, they got 2 million square feet in this market where they store parts because they can't have their planes wait to be built, waiting on a certain part. They can't stop production for a certain part, which, there were some logistic challenges, over that same period, just getting product to and from during COVID, et cetera. So, we've seen that impact, and they took down. I mean, there were a lot of vacancy in that time, and there still is a lot of vacancy. I think we're just over 10% vacant in our market,
Hmm.
which, you know, if you look at the great financial crisis, that was a rough time. And I think this market's actually worse.
Hmm.
So there's more stagnation. There's a couple landlords that are diving to get occupancy, Prologis being one of, and all that's done is drive rates down. So, we're not, it's almost like stagnation in the sense that we're seeing a lot of shorter term deals, renewals, just kicking the can down the road where the landlords are happy to do that to keep occupancy. But I think, even in the last month, most of my listings across the board have seen more activity than they have the previous 18 months. So I'm excited for the next 6 months and think that we're going to turn the corner. We're one of the last markets to come out of this challenging time. So hopefully it's soon.
You mentioned the mayor and a anti-competitive stance, an anti-business competitive stance that she has being a contributing factor. What else is the cause for that? With Seattle being a world-class market, 10 years ago, it was probably one of the most sought-after markets in the world for new activity. What caused that shift to it being not only in the position that it is, but slow to come out of it?
Well, I think, historically our market's kind of we've lagged into downturns and then we're one of the last to come out of it. So it's definitely continued on that same track this time. I just think, we've got this, they call it a millionaire's tax, but it's essentially an income tax that in the state of Washington that it was passed into law, but there's all these challenges because we have in our state constitution, it prohibits income tax. But, you know, lawmakers are crafty. They want more capital. They want more, additional revenue. So they're trying to do anything they can to get more revenue. I think it's like any strong community that has tax challenges, New York, California, that there's certain markets where stuff's still going to happen. Deals are going to get done. Business is going to be there because people like living there. And I think Western Washington and Seattle are that market. Our summers here are literally some of the best in the world. It's 75 degrees, no humidity. So for 4 months of the year, it's pretty nice to live here, and the rest is a struggle. But I think those are some of the challenges. But let's talk about the positives. We have a continuing growing tech, influence, and I think if we didn't have that here, then the state would be in a rough spot. So we're still gaining population, and that's really from a distribution aspect. We continue to get more rooftops. So that's why our market is still in demand. We're a little closer via boat from Asia with products than say Long Beach. We're closer by rail to Chicago than Long Beach. So there's still a lot of attractions to this market for industrial users. And I think that's going to continue even with some of the challenges that we have in the marketplace with being attractive to business. We still have strong fundamentals of high income, high education, demand for housing. And so that's some of the contributing factors that keep this thing going.
Yeah, it always reminds me of a saying that I heard a while ago. Is someone was talking about how there could be very negative people in a market and there can be very positive people in a market. And one might say that the whole market is about to collapse, and the other one might say it's going to the moon. And the person I was making the comment on is that's what makes a market, is that you
Hmm.
have both sides of it. Because if everybody was super bullish, then it would just push prices to the extreme and there wouldn't be any balance. And conversely, if you had everybody that was very negative about it, then the whole system would drop, and then there'd be opportunistic people that would come in. So there's always that balance and that equilibrium that finds itself of people that are very bullish and then people that are very cynical. And I like to be the bullish one overall, because I think there are a lot of positive things that are happening right now in North America in general. Uh, Nearshoring, I think, is a great one. A lot of the advanced manufacturing that we're seeing in North America is very positive. So I think that there are a lot of reasons to be optimistic about the market, and while there are some reasons to perhaps be cynical about it, I think that those can be outweighed, as you said there. One question, and before we get into the nearshoring, that's one thing, and the advanced manufacturing I want to talk about. On the Seattle specifically, what are rates right now? If you're 10% vacancy rate, and I guess you could answer that Seattle specific or the surrounding areas for just market rates, and you could break it down if you wanted to talk small bay or big box or manufacturing, or if you just have a general number. And then how does that compare to California, which is the big market in West Coast America? How does it compare? What are the rates in Seattle, and then how does that compare to California?
Sure. Well, I'm not an expert in California, but I hear stories. If you're near the port of LA, you're $2 a foot per month, and we quote on the monthly basis, but we also quote here, which is a little unique. We quote our rates on a footprint, or we also call it shell, and then have an office add-on.
Hmm,
So that confuses most people
I didn't
because
know that either.
yeah, you're really paying more than a couple dollars per square foot for your office because you have to count the warehouse under the office as well. So, our rates are probably down 20 to 30% from the peak, depending on product type and size. Pretty much across all sizes, that's the case. There's some, I've got a project that's small bay, dock high, that's really rare in our market, and we're probably down 10%, and that's it. But when some of these other big box spaces are down, oh gosh, yeah, 30 to 35% on rate. So I'll do a little small bay. If you're 10,000 feet with 2 docks and a grade, we're about $1.10, $1.15 on the shell. Office add-on for second or third generation office is going to be $1.35. And our triple nuts, triple nuts are high now. They're getting up there. They're for that product is about 40 cents, 42 cents. So if we jump to 30,000 feet with 6 docks and a grade, 24-foot clear, that's good quality product. You're going to be in that $1.10 range a square foot on the shell. Similar add-on for office, and your triple nuts are going to be low to mid 30s depending on the product. And then if you jump, let's say you're 150,000 feet, because there are 60 options if you're 150,000 feet. So your rates are going to be high 70s, low 80s on the shell. Triple nuts, we're going to be anywhere from 25 to 32 cents. And what's really unique is we don't have that many large spaces, like, for instance, above 600,000 feet. There's only a couple options. And that pricing is near peak levels at like $1.15 on the shell, only because there's just a couple options, right? And so that's where the big demand is in bulk space above 500,000 feet in our market. But everywhere else, it's challenging as well. So, but at the same time, you've been doing this long enough. From the personal broker's perspective, to all the brokers that are listening, is, this is a good time to gain market share. Like, I've gained market share here. I've picked up some listings that I would have normally not had opportunity to pick up. I'm doing more user sales and just kind of sticking and moving with what the market gives you. And instead of just burying your head in the sand and going and complaining to your buddies in the office how the market sucks, there still is opportunity. And that's one thing that I think you have to be successful. You have to be an optimist, because that's what will get you up going every day and get your mind going and thinking about how to connect the dots in these challenging times.
Have you done anything interesting over the last two or 3 years where it has been challenging? Any noteworthy deals or good stories on that?
Well, I think the user sales have been really interesting. There's some sellers that have finally said, okay, I do need to sell. I want to sell. I'm ready to move on. Um, and, for instance, I'm working with a Fortune 500 company right now. We got a piece of dirt under contract. They've been looking at our market for 12 years. And finally, there was this little, I would say, lack of demand period. And we were able to go in and get control of a property that we probably we couldn't move that quickly because of the size of the company. In a time when the market's stronger, like, we would have been priced out by a developer. And this is where some of the users can have an opportunity, because there's less investor and less developer demand right now. So, I mean, I've done 3 or 4 user deals in the last 2 years that they couldn't have bought or had trouble buying in a different cycle.
It's a great point, is that in different types of cycles, that means that there's different opportunities. So if the market goes down, all of a sudden companies that were perhaps only tenants before now start looking at opportunities that wouldn't have existed in a hot market, because very few owners want to sell when the market is going up. It's an affliction that many in the industry have, is that when the market's going up, it's very hard to sell. But if the market turns and then all of a sudden people are like, well, maybe I missed the window, but I don't want it to get worse. And momentum can be a powerful thing. So if it unlocks opportunities for companies that otherwise wouldn't have been able to buy. I think that's a very profound thing to note, is if for brokers listening, is look for opportunities instead of problems, because there's somebody in your office, or there's somebody that that's very negative. And I remember last summer, it was probably worse for us last summer than it was this summer. Some guys would just go golfing, and they wouldn't do. They didn't even want to think about the issues, and they just put their heads into the sand, and their sand wedges into the sand, I guess, perhaps as well. And they just didn't even want to think about it. But that's an opportunity as you mentioned, to go and get market share. That's an opportunity. If you're an owner, you're an investor, go and look for opportunities. If you're a tenant, go and look for opportunities where the market might have come down and you might be able to get a better deal. That's not the time to take time off. That's the time to actually go and double down and actually work harder on that. So yeah, thanks for sharing that. I wanted to circle back on the rate thing because I still don't really understand that. So I get the per square foot per month. You guys in California, or I think some areas of Texas do it as well, as opposed to quoting it annually. I get that though, but I still don't understand, what was that an industry decision to push towards having a separation between the warehouse and the office? Or was that, how did that come about? And as opposed to just doing a blended rate of just saying it's $1 a square foot for the whole thing, who decided to break that down into office versus the warehouse?
Well, that our market was kind of started in the 60s and early 70s. So I would think I was born in 1978, so I wasn't part of that conversation. But I I think that there were probably some founding brokers or owners that said, "Hey, this makes more sense. It's clearer." Because what happens is if you have a high office built out, your blended number gets totally skewed. So it's hard to compare apples to apples on a real estate transaction when you're looking at different warehouse size and office size. So it's just the problem with it. I mean, it makes sense to us because that's what our market quotes, but it doesn't make sense to people that are coming into our market for the first time to get their head around it. Because essentially, if you're a dollar on the shell, let's say you're 10,000 feet, you're a dollar on the shell, you got 1,000 of office, and you're $1.35 on that office, you're really paying $2.35 on that office component, and then $1 on the actual warehouse. So you could look at it that way, but that's just not how our market displays it and advertises it.
Yeah, that's really interesting. And you're right. If that's all you knew, then of course it seems very familiar to you, and it does make sense. I get why it is, because I've seen it numerous times before as well. As you have a space that's 50% warehouse and 50% office, and it's hard to evaluate that if you just quote blended rates. Yeah, I guess it's just and you must be the only market. I mean, that's the first time that I've heard of it, of that's actually separates the rates between the office and the warehouse.
Yeah, what's even more interesting, so I'm referring to kind of what you call it Kent Valley or South Puget Sound, which is south of where my office is. What's interesting is on the east side, which has limited industrial, they quote it like the more traditional way. It's still monthly, but it's quoted more traditionally. So, you know, around here, it's submarket by submarket how the rates are quoted.
Hmm. On the Prologis, you mentioned them earlier on how they're pushing for occupancy right now, and as a result, if you're there's always that balance. You can have high occupancy and high rates in a great market, but in down markets, if you want to push high occupancy, you probably have to lower your rates a little bit. I'm a big fan of Prologis. I think they're the bellwether for the industry. Whatever they do, I think is going to ultimately trickle down to the industry as a whole. So I follow Prologis pretty closely. If I were to guess, as a shareholder of Prologis and just as an industry insider, if they're pushing occupancy, that's probably a mandate on their end where that's what they're pushing out in their quarterly reports. Is they're saying our occupancy is 97% or whatever it is. With them pushing rates down, them being a bellwether for the industry, do other landlords have to react to that? Do they have to push their rates down, or are you finding other landlords being more stubborn or resistant to lowering their rates and hoping the economy recovers and they can catch it on the other end?
In general, yeah, of course, it impacts other deals and other landlords how aggressive they are. There's a few holdouts, but they have a lot of vacancy. So I think it depends on your capital too. If you own your property free and clear and there's a few, let's say, wealthy families that have holdings and they have no debt, they're looking for the right tenant and they'll be more patient for the right tenant. Yeah, they got to lower the rate a little, but they're waiting for the right tenant. And that could be like, for instance, there's a couple landlords that don't like 3PLs because they're heavy, heavy traffic or hard on buildings. And so they typically won't do those type of deals no matter what price. So it kind of depends on the situation, but Prologis, I think they're looking at it like, okay, we're gonna get to 97%. That's their goal, at least what I've heard. In our market, they're at 95% right now, so they're trying to get to 97 by the end of the year. And really, what they're posturing as, let's just live to fight another day. They know the market's going to come back. Let's get credit when we can, even if it has to be cheaper, and lower that risk, and we'll live to fight another day. So there's definitely that happening. The other impact too, and this goes back to brokerage, is there's so many renewals now. Like, I'd say historically, I don't have any data that necessarily prove it, but it's probably about 70% of tenants were renewing in a traditional market. I guarantee you that number is got to be closer to 90 to 95% right now,
Wow.
because tenants don't want to take additional risk with more space right now, right? They're cautious. And this is our market, right? I'm not talking about Chicago or Atlanta, some of these, or the Lehigh Valley, some of these other markets that are having more growth than we are. But, tenants are doing the same thing landlords want to do. They want to survive. And if the market is renewing at a much higher rate, why not, as a broker, create a specific campaign that talks about how you add value during renewals? If 90% of tenants are renewing right now, then, that's an opportunity for you to be different, uh, and have a specific campaign to prospective tenants on your services to renew them. So that's another example of, I look at it as an opportunity.
Yeah, that's a really good point. And I hope people, young brokers especially, need to hear this, is that if your normal business slows down just as a result of ebbs and flows of an economic cycle, that doesn't mean that you have to slow down. That just means you need to take on new initiatives. And you mentioned the owner user side of it before. The renewal side is a great way to target. If 90% of tenants, even if it's not 90% in your specific market, there's going to be a good portion of tenants that do renew, and a lot of landlords are going to be receptive to have that conversation if you bring some value to the table. I think most landlords would get very reluctant to pay a fee if they're just renewing a tenant that they would have renewed anyways. But if a broker is able to provide some value to the transaction, then I think landlords will be mostly receptive to it. What's been your experience on that with renewals? You typically will collect the fee from the landlord, I'm assuming.
Absolutely. And our market shifted too. This is one thing, I would say 25 years ago when I got into the market, we were probably 70% controlled by local and regional players, investors, and it's completely flip-flopped. It's 70% institutionally controlled, and those institutions are happy to pay renewal fees, yeah, unless you show up at the very end, right? No, I mean, yeah, and I represent some national landlords like Link, Prologis on a couple spaces, and if you add value, they're happy to pay your fee because you're going to help get the deal done and keep that tenant.
Do you relay that information up front to the landlord? I'm assuming if it's a larger one, they're very familiar with the process. How do you relay that information on what you can provide if it's a landlord that you don't know and you're asking them to pay you a fee on renewal?
Well, in almost all my listings, I only pick listings that will pay on a renewal. So for instance, if I represent the landlord on the initial lease up, I want to see that thing through. And so that's what I like to see happen. And that's the landlords that I want to target. Like, I'm not really interested in taking a new listing that they're going to go try and make a deal and then be all over me when they can't renew that tenant, get a vacancy, and then they put the pressure on, like, why aren't you filling this? Like, I, I that's not really what I'm interested in. And that's only kind of a new thing. Like I started doing that about 5 years ago, because I can be a little more picky now than I could before. But landlords, I don't know of one landlord in my market that will not pay an actively involved broker renewal fee.
I think, yeah, the key there is actively involved. And you mentioned it just a few seconds ago, too, is if you swoop in at the 11th hour when the deal's almost already negotiated and try and squeeze in for a fee, that's a surefire way to not get a renewal fee on it. One question I had on that you'd, I think, be able to speak very well to is Prologis's Simple Lease. And I don't know exactly when they introduced this, but correct me if I'm wrong, it's an 11, 12 page formal lease agreement.
Yeah, they're a little larger here, but they call it here referred to as clear lease. And I'll comment on it. At first I thought it was a terrible idea. I thought it was an additional profit center. They essentially, you have all your costs known, and the only thing that can change is the taxes, right? Because Prologis can't control the property taxes. But what I've learned is that I think a lot of tenants like it, mostly because all the numbers are known, right? They know, yeah, they might pay a little premium, but they know if the HVAC craps out, year 4 into their 5-year lease, they're not going to be on the hook to put a new HVAC unit on, and it's going to get, they're going to have to pay 20 grand or something. Any problems with the roof, again, they're covered, so they're not going to get anything hit on their triple nets trying to do a pass through on any of these items. So I think a lot of tenants like the clarity and the transparency of it, which I didn't think that would be the initial reaction.
Has it prompted other landlords to look to do something different or just something similar, or have they just acknowledged that Prologis is a different animal and they're going to do different things?
Uh, what I'm saying is it seems like every time the market gets strong, there's some new thing that the landlords put back on the tenant. 10 years ago, there was a local family that has really nice quality stuff. They're called the Sigali family, and they have great product. And they were the first ones to put in a roof reserve into all their deals. So you pay another, I'm going to guess, 3 cents a square foot per month on your triple nets, but then you're never going to get, a call out or a charge for the roof replacement or roof repair. I see the market going to more of an absolute net lease. More and more is getting put on the tenant every new cycle. I just see that's where it's going to go.
Is the Segali family the same one of Super Mario Brothers fame?
Absolutely, yes. So
It
the
is.
story goes Mario Segali, the patriarch of the family, who passed away a couple years ago, was the landlord of Nintendo of America's one of their first deals they did in our market. And he was a character, literally a character, really unique guy. And they supposedly named the character after Mario Segali.
Yeah, the character was supposed to be, or he was originally Jumpman, is what he was going to be called, and then after that interaction with Mario, and I think he went in and he was very animated. They weren't paying their rent, or they were behind on their rent or something. He was very animated and angry as you'd expect a landlord to be. And they're like,
Yeah.
"Wow, that was pretty interesting. Instead of Jumpman, let's name him Super Mario." So
Yeah.
I find it so funny that the most popular video game character in the world is named after an industrial landlord. I think that's a good tie-in for our industry.
Yeah. Yes. And Mario's son is less animated, but they have incredible product, and you know they're one of the strongest ownerships in our marketplace.
Hmm. Let's talk on with the remaining time that we have here. I want to get your thoughts on nearshoring and the advanced manufacturing, both driving the economy in different ways and in different areas. Starting with nearshoring, given that that's critical to where you are being in a major port market. What are you seeing right now, or what are you hearing from the big companies or the 3PLs or the companies that are dealing with this changing landscape on a daily basis?
Well, really, the only significant nearshoring story that I can speak of is Boeing. They're, the major aerospace player, manufacturer in our market. I'm sure it's happening on some smaller scales with other companies, but they're really the ones that did it first in our market. And I think time will tell on if it's successful. I think it was imperative to do it in the short term, but we'll see what happens in the long term. I think more of the border towns, whether you're California or Texas, probably have seen a bigger uptick in nearshoring than here, but Boeing's a good example of that. However, what we're seeing, and this might be isolated to Seattle or in Florida, is a crazy tech revolution when it comes to rockets, right? So Blue Origin, Jeff Bezos' hobby company that's now a business, has a huge presence here. They are, I believe, the largest employer in the city of Kent, which is one of our major industrial submarkets. And Blue Origin, there has since been spin-offs like Stoke Space. Stoke Space is another rocket company that was founded by former Blue Origin, employees. So, and then we have a big presence of SpaceX in our market too. So, when you talk about rockets, drones, Seattle is a big hub for that technology, and it comes back to, the engineering and the education system and what attracts those people to our market. So that's what it's been really interesting to watch. And the big driver of that demand is power. So, all these companies that test rockets and other equipment, technology equipment need power. And so that's like many markets, one of our biggest challenges. So and there's a story about this. There's this building, this parcel in the city of Kent that is controlled by Mortenson, the developer, and they have the ability, I think I heard the number to provide, they could build 150 to 300,000 square feet of building, depending on likely two levels. So it'd be a two-story industrial building. And they have supposedly 29,000 amps of power to the site, which is 10 times what your traditional site is. So I guarantee you that these tech companies that are heavy in this market they're all clamoring for that space just because the power is 10 times what it is in any other facility in our market. So it'll be interesting to see who goes there. And I know there's a couple groups, poking around right now, but I'm curious what the rate is going to be, right? Mm-hmm. So if a new development would be $1 a square foot, I mean, I don't know if we're going to be at $2, we're going to be $2.50 for this building, but it's going to be high. For instance, another deal that power was a significant factor is you've seen or heard about those autonomous cars, Waymo, right? So they're about to sign a deal, if they haven't signed it already, with Prologis in South Seattle, technically city of Tukwila. But and the reason they went there is city of Tukwila allowed their use, and Prologis is bringing in 4,000 amps of power to a 145,000 square foot space. So again, standard power would probably be 1,000 amps for 100, maybe 1,500 for a new building that's 145,000 square feet, and Waymo's getting 4,000 amps. So, and I heard that deal is about $1.70 on the shell. I don't have the comp yet, but that's not quite double what market is, but significantly higher than market because they had the power. And I think Prologis is spending the $4 million to bring that extra power in, but they probably wouldn't have got that deal if they didn't have the power.
I wouldn't be surprised, especially in your market where you already delineate between office and warehouse. I wouldn't be surprised if it actually catches more traction, that same type of idea rolls over into power as well, where tenants start paying based on the power that's there, because there's a huge difference for a company that needs it between a building that has 1,500 amps and a building that has 4,000 amps. So I wouldn't be surprised if rates actually start getting quoted as an override or some recognition that that power is so critical with some of these companies that the location is almost secondary. The main driver is the power. If you don't have the power, you can't actually do your operations. On that, because we're seeing this, my armrest just will fill off my chair again. We're seeing this. We did their Meta, Facebook just announced a major data center pretty much in our backyard. $13 billion gigawatt of compute, and you'd think that that's a good sign, that type of economic activity. And instantly there was considerable community pushback and a lot of misinformation out there as well, but a lot of valid concerns that residents have brought up about it. But it just strikes me that you have this tension between development, and it's always existed. This isn't new. You put up a new apartment building in downtown, and the neighbor's going to be complaining that there's shadows now, or there's too much traffic congestion. So there's always going to be the tension there. But it seems to be much more than anything I've seen before of these large centers, and it could be space technology, it could be a data center, it could be an advanced manufacturing, it could even be an Amazon fulfillment center where residents are just saying, we don't want any of these in our neighborhood anymore. Are you seeing that in Seattle generally, or is it more project specific?
Both. I mean, yes, we're seeing it across the board. It's very ironic because people want goods and services faster and faster. They want their packages to show up within an hour, but yet, they don't want the building in their backyard. So that I think a lot of consumers don't realize the infrastructure needed to provide those services. So I think that's just the way it goes when there's change. For instance, there's a developer, I'm not going to say their name, that had a big project down near the port of Tacoma, and the neighborhood got so aggressive. They actually had a group of protesters force their way into their office space where, their local headquarters is. So, uh, you know, it, I think people are getting more and more extreme on what they do or how they feel, and not only about, industrial real estate development, but everything these days. It seems like there's more emotion than ever when they feel like they're wronged.
And there's also the community element of it as well, is that you go on and complain about something. There's other people that want to complain as well. And now all of a sudden you have a congregation of people complaining about the same thing. And then it instills a self-perpetuating machine where you go on, you're like, I wonder if this person's as mad about this as I am. And it almost feeds this machine that it can go both ways. It's like a flywheel, I suppose, that once it starts getting a little bit of momentum. And the funny one that I saw is people were complaining about this Facebook data center. They were complaining about it on Facebook. And people are like, do you not understand like what's going on here? Like, you're complaining about something on the system that requires it in the first place. So yeah, there's a ton of moratoriums being contemplated right now all over North America, of saying we don't want any more warehouses, so we don't want 3PLs, we don't want distribution centers, we don't want anything, let alone going after already controversial ones like data centers and advanced technology ones. So it's going to be interesting to see what happens here. Is if communities keep having this forceful pushback against true economic development, and it's a tension, and it's probably something that's not going to go away anytime soon. What do you think on that?
Yeah, totally agree. I just think this cost of doing business in our market and our line of work, that there's pushback because, you often take, a little cattle farm or a treat area, and then all of a sudden, it's cut down and there's a warehouse. And, people want the goods and services that those bring, but they don't want it in their neighborhood, or they don't want to drive by it, on their way to work each day. And that's just not reality.
Yeah, that's a great way of describing it. We'll put all the information to connect with you, LinkedIn and your website profile. If anyone has needs in Washington, Seattle specifically for industrial real estate, I encourage them to reach out to you. And your podcast as well. I was honored to be a guest on that. So we'll put a link to that episode so people can check out that one or other ones that you've done. Anything else that I'm missing? Anything else you want to include in that, or even just give final closing statement to you as well?
No, I just like the platform. I love to talk to people about industrial real estate, and especially from different lens and different markets and what's happening in each market. So I think that's one of the most interesting things that we do is as brokers that are connected, with the same product type and the same struggle every day, but different markets with different fundamentals. So it's always good to talk about each market and how they're different and how we're all trying to get deals done and solve problems.
Yeah, well said. Well, great chatting with you again, and look forward to doing another one down the road. And we can perhaps talk more just on a brokerage side on strategies or things that brokers could do if they wanted to change or enhance their business, or we could even just go and talk full on nerd out on industrial real estate in general. So let's tee something up for another time and have another chat about it.
Sounds great. Appreciate the time, and Wyatt's going to earn his keep on this one.
He definitely is. There's going to be some editing, post editing that goes into this one. So thanks, Wyatt, and Kraig. Thank you as well. Great chatting with you.
Okay, have a great day.
Okay, take care.